largely.
Yeah, I think so too. And you know, that's the hope, I think, of many out there in the market, because exactly of what we were just talking about, Bernie, that this is an argument that is certainly out of date. Let's talk to Dan David. He's the CIO of FG Alpha Management, joining us live from New York. Dan, you are one of the people that just want this conversation to go away. It is outdated. If you look at everything that China is doing right now, the restrictions they are having in place is to stop people from moving capital out of China rather than the other way around. This would serve to prop up the currency rather than talk it down, correct?
China is undoubtedly defending their currency and has been for some time. They sold over $140 billion in US dollars last year defending their currency. They've come up with makeshift policies to stop capital outflow. So, you know, what we're dealing with here is you know, the kind of world we're living in right now where alternative facts matter, whatever alternative facts are. But we seem to think here in the United States that China is devaluing their currency and keeping their currency low, when the fact of the matter is, if they stop defending it, it's going to be a pretty serious problem and will likely result in another 50 cents to $1.
Right. Dan, let's talk about your forte and what you're really here to talk about, and that is playing China, investing in China, but by doing it in a different way, doing it in the opposite direction. How should I say it? How malleable is the China market right now? I mean, in terms of shorting opportunities, stocks that are available for shorting. I mean, how has that developed over the past few years? Has it been impressive growth? Has the list grown to a very usable, very functional amount?
It's a great time to be short in China or here in the United States. You definitely want to be uncorrelated to the market right now. I'm very happy that I am uncorrelated to the market. I don't want to be stuck to when somebody sends out a tweet, the market goes down 10% or a stock goes down 10%, you know, or when President Xi responds to that tweet, I'm going to have to deal with that in a macro sense. So what we do is we hyper-focus on specific stocks. And, you know, that's been very, very successful for us over the last 5 years. We found dozens and dozens. As a matter of fact, a dozen stocks that we have issued short reports on over the last 5 years have been delisted and gone to zero. Last year, we had 2 stocks that are now penny stocks. TechPro Technologies, I presented at Sohn Hong Kong, is now a penny stock. Sino Grandness in Singapore, we talked about 2 months ago, you know, and it dropped 35%. So it's a good time to be a short seller.
Right. My concern, Dan, my concern is in these parts, you know, you can't do things necessarily U.S. style. I mean, we don't have that depth of the market, and the rules of engagement are very, very different. I mean, unlike other markets, you know, in these parts, you can actually see a suspension or a halt to active trading of an issue for not days, not months, but years. You know, if there is any reason, the regulator or the company itself can call quits and just pull the stock out of commission, and it'll be frozen, and you're sitting on non-tradable issues for years at a time. That's a big risk for players like you.
Bernie, you bring up a huge problem that has been discussed for the last couple of years. I think we're going to see progress on this. But you look at Hanergy, Tianhe, been halted for 2 years. There's no reason for it. If you're investigating a company for 2 years to decide whether they're a fraud, they're probably a fraud. It doesn't take 2 years to figure that out. And it's hindering the Hong Kong market. They understand that. And I think the SFC is taking some good measures lately, going after Standard Chartered and UBS for the China Forestry IPO. I'd like to see a lot more of that. That's going to be easy money for Hong Kong. They're going to want to pay those fines. They don't want individuals to be attached to those fines. So they'll pay just like the banks here in the United States pay. As long as nobody gets individually charged, all the big banks here are happy to pay hundreds of millions in fines a year. In fact, they budget it.
Okay, David, just quickly before we let you go, what is your top trade for 2017?
Well, I'm disclosed I'm short right now, Car Inc., 699 Hong Kong. It's a secular decline. They're the Hertz of China. But they got into a business with a related party, UCAR, who's competing with Didi, and they've run into very stiff competition. And right now, Beijing and Shanghai, which represent some 70% of their business, are saying that all the drivers have to have a local Hoku to drive those vehicles. That's 80% of the drivers in those two markets, and they're going to lose those drivers. They're going to lose that business, and it's going to affect 40% of Car Inc.'s business for the long-term future. Past that, we have 3 or 4 other short trades in the pipeline that will be more of the market manipulation and fraud reports.
Okay. All right, Dan, we appreciate your time. Thank you so much for joining us today. Well, coming up next, a Brexit bump for...